Yesterday, we covered the Dow closing above 50,000 for the first time in history. And we closed that recap by saying the milestone was real, and so was the fragility underneath it. Both things were true. Today, in a single trading session, the fragility took over. Here are today's numbers. The Dow lost 537 points, down 1.07%, closing at 49,126. That's back below 50,000, just 24 hours after closing above it for the first time ever. The S&P 500 fell 93 points, down 1.24%, closing at 7,408. The Nasdaq dropped 410 points, down 1.54%, closing at 26,225. And the Russell 2000 lost more than 2%, snapping a 7-week winning streak and posting its worst day since November. Every single thing we've been tracking for 2 weeks showed up in price today. Start with the catalyst, and there isn't one. There's no single piece of news today. The Trump-Xi summit ended without any concrete deals announced. The peace trade via Beijing angle from yesterday turned out to be hollow. But this wasn't a one news event sell-off. It was a repricing. Look at where the damage hit. Chip stocks led the decline. Intel fell 6%. Micron lost 6.6%. AMD dropped 5.7%. Marvell, ARM, and ASML all fell around 4%. Nvidia, ahead of next week's earnings, lost 4.4%. And Cerebras, the AI chip company that exploded 75% on its IPO debut yesterday, gave back 10% today. A 24-hour round trip from peak euphoria to peak unwind. The names that led the market up are the names leading it down. That's how blow-off patterns end. But the chip rout is the symptom. The cause is in the bond market and the Fed. The 10-year Treasury yield jumped 9 basis points to 4.55%. That's the highest level in a year. And here's the number that changed today's trade. According to the CME FedWatch tool, the odds of a Federal Reserve rate hike at some point this year jumped to 45%. A month ago, those odds were 1%. The market has gone from pricing in cuts to pricing in hikes in 30 days. That's not a small repricing. That's a regime change in what investors expect from the Fed. Why? Because the data is forcing it. We've had hot CPI, the hottest PPI since 2022, strong jobs, sticky wage costs, and today the Empire State Manufacturing Index came in at 19.6 against expectations of 7. That's the highest reading since April 2022. The economy isn't cooling. It's running hot. And a hot economy plus sticky inflation plus rising oil prices is the exact box the Fed least wants to be in. The hawkish camp just won the argument the data was having internally. And the oil piece is real. West Texas Intermediate climbed back above $100 today, up over 4%. Dan Niles told CNBC, quote, 10 of the last 12 recessions were preceded by a spike in oil. End quote. Niles isn't predicting a recession today. He's just pointing out what historically tends to happen when oil moves the way it's moving now. The peace trade is dead. The Iran story isn't resolving. And rising oil is feeding directly into the inflation problem that's already driving the Fed. One more thing worth knowing. Today is Federal Reserve Chair Jerome Powell's final day in office. Kevin Warsh takes over. So the Fed transitions leadership at the exact moment the market is repricing for hikes that Powell never delivered. The new chair walks into a much harder problem than the one his predecessor was managing 6 months ago. So what do you watch from here? The first thing is whether Monday is a bounce or a continuation. Today's move was big and broad. Markets that fall hard often see reflex bounces within 24 to 48 hours. If Monday bounces, today was a position-clearing event. If Monday doesn't bounce, today was the start of something. The second thing is Nvidia earnings next Wednesday. The AI trade just got punished hard. Nvidia's print either bails out the bulls or confirms today's reversal. There is no middle outcome. The third thing is the Fed transition. Watch for any Warsh signaling in his first week on the job. His public stance on rates will set the tone for the entire next leg of this market. The closer is short today. Yesterday, the milestone was real. Today, the fragility took over. Both of those things were true at the same time, and both of them happened in 48 hours. That's not a contradiction. That's how markets work at turning points. Whether today actually was a turning point, or just a sharp pullback in an ongoing rally, is what next week decides. That's the day the Dow gave back 50,000. We cover the markets on the days that actually move, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.